obsessed with the billion-dollar lie that fooled the world. In 2014, as the world became obsessed with cryptocurrency, a new digital revolution seemed unstoppable. Bitcoin was rising, blockchain was the future, and investors were desperate not to miss the next big opportunity. Then came OneCoin. It promised to be the next Bitcoin, a financial breakthrough, a global crypto empire. At its center stood a charismatic woman who called herself the Cryptoqueen. Her name was Ruja Ignatova, and what followed would become one of the largest cryptocurrency frauds in history. Ruja Ignatova was not an unknown figure. Born in Bulgaria and raised in Germany, she was highly educated, holding a doctorate in law. She spoke multiple languages and projected confidence, intelligence, and authority. On stage, dressed in elegant gowns, she appeared more like a tech visionary than a criminal. In packed arenas across Europe and Asia, Ignatova told audiences that OneCoin would surpass Bitcoin. She claimed it was a revolutionary cryptocurrency backed by superior technology. Investors were told they were getting in early before public exchanges listed it. The opportunity, they were told, would not last. But there was one critical problem. OneCoin was not a real cryptocurrency. Unlike Bitcoin or Ethereum, it had no independent blockchain. There was no transparent public ledger, no decentralized verification system. Instead, OneCoin operated entirely under centralized control. Members purchased education packages that supposedly taught them about cryptocurrency. Along with these packages, they received tokens that could be converted into OneCoins. The value of OneCoin appeared to rise steadily, displayed on the company's internal website, but the price was not determined by open market demand. It was set internally by the company itself. There was no real market, no real trading, and no real blockchain. Behind the scenes, OneCoin functioned as a classic Ponzi scheme. New investor money was used to pay earlier participants. As long as recruitment expanded, the illusion of growth continued. OneCoin's business model relied heavily on multi-level marketing. Participants were incentivized to recruit friends, family, and colleagues. Commissions were paid not for real crypto trading, but for bringing in new buyers. The scheme spread rapidly across Europe, Asia, Africa, and parts of the United States. In developing countries especially, OneCoin was marketed as a path to financial freedom. Investors were told they were joining the future of money. By 2016, OneCoin claimed millions of members worldwide. Promotional events filled stadiums. Lavish marketing campaigns portrayed Ignatova as a financial genius. But regulators were beginning to take notice. Financial authorities in multiple countries issued warnings. Some countries banned OneCoin's operations. Investigators began questioning its lack of transparency. Experts publicly stated that OneCoin had no verifiable blockchain. The cracks were becoming visible. Internally, former employees began raising concerns. Documents later revealed that executives were aware the coin had no real blockchain foundation. Emails showed discussions about manipulating coin supply and price displays. Still, recruitment continued, the scheme grew, and billions flowed in. By the time authorities began serious investigations, OneCoin had reportedly collected more than $4 billion from investors worldwide. Some estimates suggest even higher amounts. It was a multi-billion-dollar illusion. Then in October 2017, something unexpected happened. Ruja Ignatova boarded a flight from Sofia, Bulgaria, to Athens, Greece. She never returned. The Cryptoqueen disappeared. She vanished just as international investigations were intensifying. Her brother Konstantin Ignatov later took over parts of the operation, but the empire was already collapsing. In 2019, Konstantin was arrested in the United States. He later pleaded guilty to fraud and money laundering charges. Multiple OneCoin executives were indicted across different countries. Authorities described OneCoin as one of the largest financial frauds ever executed. Yet Ruja Ignatova remained missing. The FBI added her to its 10 most wanted list, a rare move for a financial criminal. Investigators believe she may have used fake passports, plastic surgery, or assistance from organized crime networks to disappear. Rumors circulated across Europe. Some reports even suggested she may have been killed, but no confirmed evidence has surfaced. To this day, her whereabouts remain unknown. For investors, the damage was devastating. Families lost life savings. Small business owners lost capital. In some regions, entire communities had pooled money into OneCoin. Because OneCoin was never publicly traded on legitimate exchanges, victims had little recourse. The coins they believed were valuable were essentially worthless. There was no real cryptocurrency behind the promise. The OneCoin scandal exposed the dark side of crypto hype. It showed how technical language combined with marketing and authority could override skepticism. Blockchain became a buzzword, innovation became a shield, and complexity became a tool of deception. OneCoin did not rely on advanced hacking or cyber theft. It relied on belief, on fear of missing out, on trust in a confident leader. The global crypto market has matured since then. Regulators have increased scrutiny. Exchanges face tighter compliance requirements. Yet fraud continues to appear in new forms. The OneCoin case serves as a warning, not just about cryptocurrency, but about blind trust in financial promises, when returns sound guaranteed, when transparency is avoided, when leaders discourage questions, the risk of deception rises. Ruja Ignatova built an empire without a real product. She convinced millions that they were investing in the future. In reality, they were funding a scheme built on illusion. Between 2014 and 2017, OneCoin became one of the largest fake cryptocurrency operations ever recorded, and its founder disappeared before facing justice. The Cryptoqueen remains a mystery, but the lesson remains clear. In the world of finance, especially emerging markets, innovation without transparency can become the perfect disguise for fraud, because sometimes the most dangerous currency is not digital, it is belief.